Now coming to our point of discussion, that is problem number 19 in Kaur and Naran. From the chapter, this is a problem taken from the chapter capital gains, right? And this is a problem. This is the example for the capital computation of capital gain for the present assessment year, and if that exemption, the asset purchased or amount deposited for the purpose of exemption, if that one is withdrawn, if that one is retransferred, then how that should be treated in that related assessment year. So both the things we have to calculate. Mr. Pawar had only one house in Bombay, which he happens to sell on 10th October 2022. Index points are given. Sale price is 28 lakhs. Then cost of the plot. This is the plot. Okay. Then date of purchase of the plot. Cost of construction. Additions made for 80,000 in 2008. Index point is available. Selling expenses is nil, and various informations are given, that is bonds invested, house purchase, like that some informations are given for want of exemption. So how to take this? First you take, as usual, what is the sales consideration. The sale consideration, which is yes, 28 lakhs. In the first line itself it is given as 28 lakhs. Then indexed cost of plot we have to calculate. See, please mind it very carefully. The important point here is, and also the peculiar point, cost of the plot is available, cost of construction is given, and cost of improvement is given. So all the three things we have to apply the index points. So first we should calculate indexed cost of the plot. Then that comes to 3,20,000 into present index point is 331 divided by for which year that plot was purchased. That related index point we have to apply. Okay, which year they have purchased the plot? Date of purchase of the plot is 2002, December 2002. So 2001 and 2, right? 2001 2. What is the index point? 105. That we have to apply. Value into present index point divided by the index point for that period, date of purchase of the plot. Okay, that we have to take. Then after deducting this from the sales consideration, then we have to take the indexed cost of construction. Indexed cost of construction is also given. This was happened in the year 2006-7. Index point is 122. So 3 lakh into present index point is 331 divided by for that period 122. So that comes to 8 lakhs 13,000 something. Okay, and then cost of improvements made for this plot. Okay, that the cost of improvement that comes to 80,000. The present index point, which is 331. Present index point is for this period 331, and cost of improvements made, okay, for that period, that index point, that is on 2008 9, 80,000 additions made, 80,000 in 2008 9, index point is 137. So 80,000 into 331 divided by 137. So we have to calculate cost of indexed cost of the plot, indexed cost of a construction, indexed cost of improvement. All the three things should be deducted from the sales consideration. Balance is long-term capital gain. Up to this point, no problem. You are well aware of this. Then, after this, that assessee purchased bonds of National Highway Authority of India on March 2023, 2 lakh rupees. Purchase of a shop, 2 lakh rupees. So these two things you should keep in mind. So purchase of bonds. What is that? Purchase of bonds. Amount invested in National Highway Authority of India. That bond, it is qualified under 54 EC. Okay. Then another one is makes bond. Yes. for a shop on the same day for rupees 1 lakh was made on a specified is 2 lakh rupees purchase of a shop, that is not considered. Then purchase of a bonds, it is eligible under 54 EC. Okay, any bonds purchased, it is eligible under 54 EC. Then another one is 2 lakh rupees purchase of not 2 lakh rupees, 5 lakh rupees was deposited in a bank. See, you know very well, either you will have to purchase the property, or if you made the deposit under capital gain scheme, that should also be considered in this 5 lakh rupees under 54(2). Okay, mind it carefully. If want, you please make a note of it. Investment of 1 lakh rupees was made in the notified, it is eligible. Deposits in capital gain scheme, that is also eligible. Only purchase of a shop is not eligible, that should be ignored. Then balance is taxable capital gain. Up to this point, no problem. Then another one is that is then he withdraws the amount for the bank from the bank and purchases a residential house. On what date he withdraw the amount? On 20th 2025. That comes to, that is the 2025. 24-25 is the assessment previous year. The related assessment year, that comes to 26-27. Okay, so any property eligible for the exemption if it is withdrawn, any deposit if it is withdrawn before the notified period, any property if it is retransferred before the notified period is taxable, right? So in this case, total amount deposited for claiming the exemption under capital gain scheme, which is 5 lakh rupees, and that amount of deposit made for the previous year 22-23, right? So 23-24, 24-25, 25-26, up to that period it should not be retransferred. Now in this case, for the assessment year 26-27, that is for the assessment year 26-27, that amount withdrawn from the capital gain scheme, that is taxable. Okay, so total amount of deposit is 5 lakh rupees and the amount utilized is only 4 lakh rupees. Balance of 1 lakh rupees is still it is not utilized, so that amount is taxable. So it is considered as deemed capital gain and it is taxable for, mind it carefully, for the assessment year 26-27 only. Okay, so 2 points you should know. 1. So far we applied sale consideration, cost of consideration and improvement, whereas in this case we are having all the 3 points, that is indexed cost of asset, cost of acquisition, and cost of construction of the house, that is asset, and the cost of indexed cost of improvement. All the 3 things are available. All the 3 things are liable for indexation. Then point number 2, for the transfer of the plot, that capital gain can be eligible for claiming the exemption under section 54, for which the assessee made the deposit under capital gain scheme. Then point number 3, we can also utilize any bonds purchased under 54 EC for want of exemption. Another most important thing is that that deposit should not be closed before the notified period. In this case, part of the amount is closed. It is only for the purpose of purchasing the house. That is not a issue. Whereas out of 5 lakh, 4 lakh rupee only utilized, balance 1 lakh rupees is not utilized, so it is taxable. Okay, so you should know this point. This is important one, and this is, though it is for only 15 mark, that is under section C, but the concept lying here is important one.